A very warm welcome to our viewers today. I'm Manisha Gupta and you are watching a very special episode of Hot Commodities. Lots lined up on the show tonight. A look ahead on the prospects for the precious metals. We will also chat about the trends in base metals, a look at the agro-commodities complex and of course the course for the currency markets. So let's get straight into it then. And precious metals, the recent few weeks have seen a remarkable climb and then a pullback in the prices of gold. Overall, the year has been quite volatile. We saw the yellow metal peak at around $1,900 an ounce in September. Currently, prices have pulled back and we are seeing gold trade at around $1,600 an ounce. So, is the yellow metal still a good bet? To answer all of that questions, we have an esteemed panel of experts joining us today. Please welcome Prithviraj Kothari. He is MD Riddhi Siddhi Bullion. Sanjeev Shah is MD Goldman Sachs Assets Management India, and Sanjeev Agarwal, he is CEO Gitanjali Export Corporations and former MD of World Gold Council. Thank you so much, gentlemen, for joining us. Mr. Kothari, let me start with you. How do you see the gold demand and prices in last 1 year, and where are you expecting them to be in the coming 1 year?
Last year, if you see the last Diwali prices to this Diwali, almost 35% increase is the price. And if you see the import figure, from Jan to September, almost 750 tons almost cross. Okay. And the October, November and December is the festival of marriage. Then it means you start the festival and the
wedding season.
Wedding season, so the huge demand till the whole us and at the end of the June. So I think it's crossed almost the 1,000 tons and above. Okay. And it's still demand is a huge demand. If you see in the rupee terms, almost 150% figure should 150% from last year to this year the figure has increased. Okay. And the last year is the 950 tons. This year almost it crosses 1,000 tons. The prices appreciation almost 35 to 40%. So I think it's this Diwali is good for those who have a gold investment in a gold. Okay.
Mr. Kothari, as I have known him all the time, has always been bullish. But Sanjeev, coming to you, that's about the physical demand. How has the ETF growth been? Because last year, of course, was phenomenal. We saw a huge jump coming in. Are you expecting it the same this year as well?
If you look at from 2010-11 has been fantastic for the ETF market, to be honest. It's just not the Indian market, even the international markets have done really well. What the trend we see now points to the fact that even 2012 will be very good. Because the amount of people who are really getting into ETFs, the amount of demat accounts which are actually opening and actually investing in ETFs, what we've seen is the number of towns where people come in from, the number of investors as such, and the people we see every month, people who put in kind of SIP because they buy one unit and over a period of time. If you look at the pure investment into our ETFs, we expect that to be very, very robust as we go forward.
Coming to the jewelry section then, and Mr. Agarwal, how have you seen the demand been? Because last year, since the gold prices were very volatile, there was this demand for diamonds as well. Do you see the coming year changing patterns as far as people buy?
Well, jewelry consumption has also been very robust, very interestingly growing at a very fast pace in spite of all the economic parameters and numbers that are thrown up in terms of GDP growth rate, etc. Which is estimated that this year the jewelry market should grow to a size of 2,35,000 crores. That's a huge consumption compared to 1,85,000 crores last year. Okay. So you're seeing that the jewelry market is growing. Definitely the demand for diamond is growing at a much faster pace. And we've seen more of that space of growth for diamond jewelry and investment solitaires over bullion over the last 6 to 9 months. Partly also because of the fact that the gold prices have been inching up so fast and so much that the replacement benefit, price differential between gold and diamond has started coming down, and you're seeing increasingly demand for diamond jewelry, like you rightly said. Going forward, it is going to remain bullish. The Indian women love to buy jewelry, so that's never going to go out of fancy. There's always weddings that are going to take place in India, and there's continuous demand which will just not stop.
Mr. Kothari, of course, it's all sorts of people who go out and buy gold. Earlier, as he was pointing out, it used to be housewives and then people who wanted to invest. But now it is the speculators, the arbitragers, people who have been investing in other asset classes, all of them actually coming into gold. So in that sense, do you see volumes really going up?
No, I think the volume going down. If you see the speculator side or hedging side, the market is highly volatile. I'm not saying in the last 30 years. Okay. This time the market is high volatile. People are losing the money. Either they hedging or they arbitrage or they speculate, they are losing the money, because if they have a long or short, but the volatility is too high, the people are losing the money. So better in India, the mentality is set. What they have earned, they buy the physical golds. More than 85 or 90% should be the same trend. If you see I'm seeing in the last 30 years the same trend. If I have money, I buy gold jewelry or maybe in the bar form or in the coin form. It's the same mentality. Still, it is the safe and the best form.
Sanjeev, it's the 11th straight year when we're looking at gold prices giving you a positive return. How far, I mean, you of course do a lot of reading in the markets there. How many people do come in with that kind of a sense, and have you seen many redemptions happen even as we saw record high prices for gold?
To be honest, no. Redemptions are not happening. I think what's really happening is threefold really. One is, as you said about the secular price rise, but also you have seen that basically the turmoil in the world has driven people to an asset class which is basically a simple monetary asset class, which is gold. So that is one thing which has happened. The second thing which has happened also is basically thanks to the ETF form, most of the people have started using this as part of a portfolio, because the correlation between gold and the other assets over a period of time has not been very high. So it really helps you diversify your portfolio, reduce your risk. So that has happened. And third is, in the last 5-7 years, if you notice, even the central banks have started buying gold. I mean, to start with, we all know that Indian Reserve Bank of India bought a lot of gold from the IMF. Similarly, we heard the Vietnam, China, and then you see all over the place. So that is the third trend which is happening. So you really have the retail section, the portfolio managers, and the hedge funds, and also the central banks. So that trend is, driving towards people really looking at gold as a monetary asset class and keep it rather than, worry about it and worry about the other financial assets, to be honest.
Since we have the best names in physical market and ETF and a jewelry head here, let me tell you to stick your neck out and tell me, where do you feel the gold price is going forward in the next 1 year? Starting with you, Sanjeev.
Well, the bullion dealers, the major international banks dealing in bullion, are talking about gold going up to $2,000 per ounce mid next year, and it looks very likely. This is a short-term purchase opportunity for the Indian household to buy into gold and jewelry, because it is expected to go up.
Sanjeev, how about you? I know you don't talk about the gold price forecast, but you must be reading a lot, hearing a lot. Where do you expect the prices?
No, as Sanjeev said, the whole analyst community is talking about nearly 20-30% from here. And more important, as I said, more and more asset gatherers are coming into this asset. So you have, as I mentioned, all people across retail up to the highest institution space, including pension funds, are coming. So I don't see a good reason as to why the analyst forecast won't come true.
Mr. Kothari, the world listens to you when it comes to gold and silver forecast. I mean, we heard you say that you'd rather buy silver more than gold. But in gold prices, where do you see the prices?
Next year it should be around 30 to 32,000 in terms of rupees, and in terms of dollar around 2,000 plus. So still I'm saying, if you have money, you buy gold, 100% buy gold. If you require 10,000 to purchase anything, you sell 5 grams of gold and what your money, and then you purchase this. So buy 100% silver or gold. If it gets good return, or ugly Diwali aapki or sukhmay ho.
Well, so that's the view coming in from our experts. Then buy into gold and silver and keep the sparkle on, whether it's in physical, jewelry firm or ETF. Gold and silver is a place to be long on even in the coming year.